So we know, or we get a sense that that the outperformance of value, the rebound of value that we're seeing traditionally, has been a precursor to regime shift in markets, and that value has performed better at the end of a cycle, obviously, than growth and momentum, and that's in the deflationary sense. Let's just imagine that we end up having a very progressive government and an even more radical Fed than we have now. And there's widespread money printing, fiat devaluation, and we go into sort of a stagflationary crisis, reminiscent of maybe the 1970s. How does value perform in that type of environment?
How would the Fed be more radical than it currently is, just out of interest? But I think that sort of scenario.
Well, we might be surprised.
Yeah,
be careful what you
don't want to tempt the gods.
Don't tempt the gods, please.
Well, I think we're probably going to see it. So whatever you think,
whatever it is, yeah.
Every year is going to be weirder than the last. I think for the foreseeable future. I think that that scenario is probably a very good one for value. Any sort of volatility is good for value. Anything that makes better balance sheets, more careful managements, better businesses perform better relatively to other companies that are out there will be good for value investors. So I think that higher interest rates, a tougher business environment would certainly be a very good environment for value guys. I think that when we're in very low interest rates, lots of liquidity, and that's, it's hard to measure what impact that has on the business, because you see, if a venture capital firm invests in a tech company that then spends a lot of money on advertising, that money flows through to Facebook and to Google. And so where advertising-driven businesses used to be pretty cyclical, pretty boom-bust, they've looked more secular recently because there's been that move away from traditional television advertising to Google and Facebook, and so the cycle hasn't been as pronounced. It's certainly been pronounced for the traditional media. It hasn't looked so good for them. So I think that potentially very good for value, and I would love to see it.